Okay, so moving right along, child tax credit. Not to be confused with child and dependent care credit. This credit is just for having an eligible child. As long as they meet the qualifications. So, the child tax credit, which you've already had some, I think you've had some tax return problems that actually included the child tax credit, but they gave you what the amount is for that child tax credit. There are income limitations for the child tax credit as well. So you can imagine we're going to have a phase out range, so one of those calculations with the proportion. So the definition of a qualifying child would be the same as a qualifying child for dependent purposes. Not a qualifying relative, but a qualifying child. So if they meet that definition, except that they also have to be under the age of 17. If you remember, for a qualifying child, they could be up to the age of 24 if they were a full-time student. The full-time student doesn't matter for the child tax credit. Once they turn 17, you're no longer eligible for the child tax credit, okay? Which a lot of people with children are like, that's when they just start to get really expensive. Well, maybe a little before that, but so qualifying child must be under the age of 17. So just remind yourself of what the requirements were for the qualifying child for the dependency purpose, okay? They have to be a U.S. citizen or resident, and they have to be younger than the person claiming the credit for the child, and they have to be unmarried. So remember, as a dependent, it could be a brother or sister as well. So in this case, it could still be a brother or sister, but they have to be younger than the person that's claiming the credit. And they have to be unmarried. So we've got Xavier and Paula. They've got a son, Marco, who's 14, qualifies as a dependent. Family are all U.S. citizens. He meets the requirements to be claimed as a dependent under the age of 17. U.S. citizen, they are eligible to claim $2,000 child tax credit. Okay. The child tax credit is partially refundable, up to $1,500 per qualifying child. Could be the refundable portion, meaning again, you get money back even if you have no tax liability. Non-refundable portion is shown on line 1040, line 19. The refundable portion is on line 28. If you recall, on that 1040 on page 2, we had child tax credit up toward the top, which was the line 19 part, but then we had another line down below with the American Opportunity Credit and the Earned Income Credit, child tax credit, which was the refundable portion. Those credits that are down below after we have entered our withholding taxes and amounts paid through estimated payments, those are all refundable credits. They act like payments. They act directly like payments. I mean, the non-refundable credits are like payments too, but only up to a point, right? Because they're limited. But the refundable credits really are, it's as though you paid the money in, okay? So, some refundability rules. Taxpayer A has 2 qualifying children and a tax liability before the credits of $5,000. $4,000 tax credit reduces the tax liability to $1,000. So there's no refundable portion there because it doesn't bring them below 0. Taxpayer B has 1 qualifying child and a tax liability before credits of $1,200. Applying the $2,000 child tax credit results in an $800 refund, even though their liability was $1,200. So they get $800 of refundable child tax credit. Taxpayer C has 1 qualifying child and a tax liability before credits of $200. Prior to any limitation, applying the $2,000 child tax credit would result in a refund of $1,800. However, they're limited to $1,500. It can't be more than $1,500 for the refundable portion. Okay, does that make sense? Okay. Now, what happens if you have a dependent child, but they turn 17 during the year? We have another credit called it's a credit for other dependents. And it's $500. So it sort of covers all of those children that are no longer young enough for the child tax credit. So this is a $500 credit for qualifying dependents who are not qualifying children. So it could also be if they've turned, say they're 19, you know, they're a qualifying child for dependency purposes, but they're not a qualifying child for the child tax purposes, but they meet all the other requirements, they would qualify for this $500 credit for other dependents. So the qualifying relative must also be a U.S. citizen or resident. They cannot file a joint return if they have a spouse, and they cannot be claimed for the child tax credit, which that makes sense. They can't. If you're going to claim the child tax credit, you qualify, because that's $1,500 more. So for certain dependents who are not qualifying children, such as adult dependents or a dependent child 17 or older, is normally what that's for. So same example as before, but now Marco is 20. He's not 14, he's 20. Lives at home, does not work, attends university full-time. He is a dependent. He meets those qualifications. He's still under 24, and he's, you know, he meets all of those requirements for being a dependent. He's not under the age of 17, so he's not eligible for the child tax credit, but he meets the test to be a qualifying relative. In this case, they can claim a $500 credit for Marco. Okay? The credits are reduced by $50 for each $1,000 or fraction thereof of modified AGI in excess of $400,000 for married filing jointly, $200,000 for everybody else. So modified AGI plus income earned abroad or certain U.S. territories or possessions. So that's the same definition that we've talked about before. We'll look at the calculation for this. So Taylor and Drew have 2 qualifying children and filed jointly. Their modified AGI was $416,322. So they are $16,322 over $400,000. In this case, and they've got 2 children, their child tax credit will be $3,150. So we'll take the $416,322 minus the $400,000. Divide it by $1,000, because it says here credits are reduced by $50 for each thousand or fraction thereof. So even if it's $1 over, it's counted as a full 1,000. So this is 16. This gets us to 16.3, rounded up to 17. We would multiply 17 times $50. This is the amount it's reduced by. This is the amount of credit they don't get. So let's do a little. Let's say we've got a head of household, so their limit is $200,000, and $215,722 is the AGI. All right, using that, what we're going to do is take that minus 200, so that's 15,722, divided by 1,000, gets us to 15.722, right? This rounds up to 16. Take 16 times 50, 800, you get the same number, 800. 800, this is the amount. So if we've got, depending upon how many children we have, we've got, say we've got 2 children. So it would normally be 4,000, right? So then we're going to take the 4,000, the max, minus 800. So our credit is, right, clearly, 3,200. Okay? So this is the amount that is not allowed. Okay? So don't forget that last step of subtracting that from the full credit, what it would ordinarily be.
So, sir, this amount cannot be below 0, otherwise 0. I think so. If this example is 4,500.
So if this is, if what is 4,500?
No, I'm taking 800. It must be 4,500.
Yeah, if it was 4,500, they wouldn't qualify.
So you can put 0, yeah.
Yeah, there'd be nothing. No credit. Right, because we'd be subtracting then that from that. But yes, it can't be below 0. It won't get below 0. So there's a worksheet. Let's see. Pat and Lisa have 2 qualifying children, ages 8 and 11, so it's a child tax credit, right? They filed jointly, so the limit would be $400,000. AGI is 112, so they're not over $400,000, so they're gonna get $4,000 of child tax credit for both of those. A child tax credit cannot be taken for a dependent child age 18, that's true, right? It would be the credit for other dependents. Glenn is an unemployed widower, a U.S. citizen unrelated to Fred and Marlene, and has lived the entire year in their residence. Glenn is between jobs, and Fred and Marlene are paying all of his living expenses until he finds employment. So we have to go back and look at our qualifying relative. Remember, if they're not related in one of those ways, they have to live with the taxpayer for the full year. It says here that he has lived with them for the full year. So in this case, Fred and Marlene, I think, can claim the $500 credit for other dependents for Glenn, because as long as he's not, so he's unemployed widower, so he's not filing jointly. If they're paying all of his living expenses. Question?